stocks and crypto headed in opposite directions over the last month. Our Kate Rooney has more on where retail investors, traders are putting their money to work. Kate.
Hey, Dee, crypto traders are picking up some slack for fading meme stock activity. The peak of day trading for stocks was back in January during, who can forget, the GameStop frenzy. Retail trading volume measured on Charles Schwab dropped roughly 30% from the first to the second quarter of this year. Goldman Sachs lays that out in a note to clients this week and downgraded Schwab as a result. And according to another firm, Vanguard Research, weekly purchases of meme stocks, notably GameStop and AMC, are down from a peak of nearly $1 billion in June to roughly $300 million this week. And in the past week alone, purchases of those stocks dropped by roughly 28%. Analysts over there say that it shows investors are, quote, falling out of love with that segment of the market. Those stock prices are catching up with weaker demand as well. Shares of GameStop and AMC down about 30% and 6% respectively for the month. Still, though, they're up big this year. And in contrast, guys, crypto trading activity hit a new high in the second quarter. That was while Bitcoin touched about 60,000 back in May, then dropped to about 30,000 where it's trading right now, or the 30,000 range. Goldman does expect that to, quote, significantly boost Coinbase results. Some others that could benefit as well, Square and PayPal. Both of those companies now offering crypto trading. Those stocks are up double digits this month. And this shift in trading behavior could also shake up some of the revenue dynamics over at Robinhood. That company slated to go public at the end of the month. Crypto trading made up roughly 17% of its revenue for the first quarter. Equities and options combined made up about 60%.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to help you make some money. My job is not just to entertain, but to educate, teach, and put all these things in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. For weeks now, we've been flying blind. We've been trading stocks without much of a clue about earnings, mostly taking our cue from the much larger bond market. That includes today, where Treasury yields soared, and so did stocks, with the Dow pole vaulting 448 points, the S&P jumping 1.13%, NASDAQ gaining 0.98%. These were all new records, basically a redo, a do-over from yesterday's decline. While once again we have emphasized that you must learn to use sell-offs caused by big interest rate declines, not stocks, but interest rate declines, as opportunities, not reasons to panic. Next week, though, we stop flying blind. Well, sort of. Yep, we start to get a clue when we kick off what feels like an endless earnings season, right? Now that we've got so many publicly traded companies to deal with, so many IPOs in the last year. I say sort of because earnings season kicks off with the major banks, and all the stocks in the market, they're the ones that are most hostage to interest rates. Rates go down, the banks make less money. Rates go up, the banks make more money. In other words, they're a microcosm for how the market's been trading for the last few weeks. I think some of these bank stocks stole from their upside today when they snapped back even harder than the rest of the market. But that's because we're coming off 4 days of plunging bond yields. Today, we finally saw a break in that decline and a nice move upward. It's too late to save the quarters. They're about to report next week. But I do think the banks have a chance to resume the climb that began earlier this year when Wall Street thought the Federal Reserve would respond to a booming economy by raising short rates, which it will eventually. With that in mind, what's the game plan for next week? On Monday, we expect to see what happens in this country now that the vicious Delta variant has become the dominant COVID strain. And I'm betting we'll see that it wreaked havoc wherever large swaths of people chose not to get vaccinated. As Dr. Eric Topol told us last night, the FDA's foolish decision not to approve the vaccines beyond emergency status has kept some people from just getting their injections. More important, though, it makes it harder for businesses to insist that their employees get vaccinated. With those two things, we could put an end to the pandemic without, we're just going to stay on what I call needless tenterhooks. I think we'll also get more clarity out of China about what's next now that President Xi seems eager to keep ramping up the belligerence every weekend, every Sunday night. I think he's just testing President Biden. I hope President Biden's ready. Tuesday is important because we have the best consumer packaged goods company on earth and the best bank reporting. And here I'm talking about PepsiCo and JP Morgan. Both are problematic. At the moment, look, PepsiCo, I know that they're going to give us great numbers, but they also have to talk about how raw costs keep going up, especially freight. JP Morgan should give us excellent numbers, too, but they're going to have to talk about how trading and lending aren't as strong as they should be. I think both stocks are too high at this moment, given those two negatives I just lined out. So I would hold off on buying them before earnings, unless, of course, we get a meaningful pullback on Monday. In that case, I would buy PepsiCo. We also get results from Goldman Sachs. If people are worried about trading profits, and they should be, then that means, well, they're going to have to be extra worried about Goldman, which so much of their business is trading profits, even as corporate financial revenue should be very strong. Don, you know what? I got to tell you, I wish both Goldman and JP Morgan weren't up more than 3% today. This conversation with you would be a lot easier. Now, let's not forget that the CPI, the Consumer Price Index, comes out Tuesday morning. Now, remember, last time we got a red-hot CPI, and the market immediately sold off hard because traders were convinced that the Fed would have to quickly slam on the brakes. They had to stop the economy because of inflationary numbers. They were dead wrong. So if we do get a hot CPI, and we probably will, well, the inflationists are going to come out of the woodwork and make you try to get you to sell stocks. Maybe we don't listen this time. Hey, we got three biggies on Wednesday. We got Wells Fargo, Bank of America, and Citigroup. Wells is a turnaround story more than it is a banking story. If CEO Charlie Scharf tells us a good tale about how the turn is going, then I think his stock can actually break away from the group, maybe even make new highs for the year. Now, I'm not so sure about Citigroup's earnings quality. New CEO there. It's an inexpensive stock, but I don't want to get behind it. Now, Bank of America, that's different. I'll say this. If you believe the economy is going to get stronger and interest rates will rise and maybe rapidly rise, then you want to buy the stock of Bank of America right here, right now. Delta Airlines reports, too. I want to know how much damage the Delta COVID strain is doing to Delta. We also need to know if business travelers are finally coming back. It's hard to read. Are lots of international cancellations occurring? That's always a possibility because of Delta. Finally, we hear from BlackRock. Now, I'm sincerely hoping they tell us their position on outfits like Engine Number One, which is the hedge fund that spent $12 million to win a proxy fight for 3 seats on ExxonMobil's board of directors with the goal of making the company more environmentally friendly. BlackRock's a huge ETF company. They own tons of shares in everything. So if they support this kind of thing going forward, well, it's got major implications for all companies. Now, if the CPI comes in too hot, we won't have to wait long to figure out what the Fed will do because Jay Powell speaks on Wednesday. He's insisted that the current bout of inflation would be transitory. And right now, I think he has a lot of evidence that it is on his side, given that many commodity prices have rolled over in the past, let's say, 8 or 9 weeks. Plus, the Chinese economy has slowed down thanks to the Delta variant, and China's a huge consumer of commodities. When I worry about China, I'm more concerned with what they'll do to Taiwan. If they're crazy enough to invade it and it doesn't turn into a nuclear war, that'd be terrible in a number of ways. In terms of the global economy, though, it means China would get its hands on Taiwan Semi, the key foundry for much of America's chip making. They report on Thursday. I think Taiwan Semi can tell us whether microchip prices have peaked. I think they have more to go. I hope one analyst will ask if they are frightened of a Chinese takeover, but these analysts pride themselves on never, ever, ever asking controversial political questions. Earnings calls are not press conferences. This week, President Biden made it clear that he's no friend of big business. He just issued an executive order mandating tougher scrutiny of corporate consolidation across a host of industries. However, I didn't hear anything about the health insurers. That's good news for United Health when it reports on Thursday. And it is still viable here. I know it's over 400, but I have to tell you, I very foolishly sold this for my charitable trust about 100 points ago. After making about 100 points, I thought I was being a pig. Turns out I was being a fawn. After the close, we hear from Alcoa. They gave us a fantastic quarter last time, but now it looks like many of the cyclicals have peaked. This one's especially important because aluminum goes into everything, and the rising cost has been a major stumbling block for gross margins for a lot of the buyers of aluminum. I want you to pay attention. Finally, Friday gives us the first important regional bank, one of our favorites, First Horizon. Now, I think it could be a whopper of a quarter because its core Tennessee market is red hot, maybe the hottest in the country. We're going to also hear from Kansas City Southern, the railroad that's trying to merge with a Canadian outfit. Expect them to comment maybe on Biden's newfound hostility to the industry. Analysts, will you please ask that question? I think the White House is trying to block this deal. I wouldn't be surprised if they somehow get their way. Here's the bottom line. What happens next week will color the entirety of earnings season. If we get some good ones, we'll be in party mode. But a negative series of numbers from the banks and some upsetting COVID stats could make for a tough earnings season. It's just a precursor, especially, though, if we get saber rattling, continued saber rattling from the People's Republic of China. Tony in North Carolina. Tony.
Booyah, Jim.
Booyah, Tony.
Hey, man, thank you for all you do, and your staff, they're great, man.
You're very kind. Thank you.
I'd like to get your thoughts on the company. They're consistently beating earnings. They're still this pretty young company. I'd like to get your thoughts on Grow Generation.
Well, Grow Generation is a stock that we got behind in the teens, and then it got to 60, and we kind of aborted ship. It's come back down. I happen to think the world of these guys as a way to be able to play cannabis. I like it much more than any of the actual cannabis stories. Thank you for the kind words. I appreciate the comments. Next week, we'll color the entirety of earnings season. That means a negative series of bank results. I'm not betting on that, but and some bad COVID stats, which I am betting on, could set a bit of a somber tone as the season begins. Well, Mad Money tonight, how is a company that I really like, a semiconductor company called Synaptics capitalizing on a more connected world? I'm sitting down with the CEO to find out. Then with Senator Elizabeth Warren calling on the SEC for greater oversight of cryptocurrency exchanges, what does that mean for stable coins like Tether? I'm taking, again, a closer scrutiny. And I'm sitting down with the CEO of Lightspeed to discuss the state of small business at the register. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.